The markets have rallied after a CPI print sent euphoria throughout crypto and equities. We'll be discussing that, the data that is coming out later this week, and much more today on Money Never Sleeps. Thanks for joining us today, everybody. As we get going, do us a favor, hit that like button. If you're new here, welcome. Subscribe to our channel while you're at it. Remember, nothing Kevin or I say is financial advice, so please do your own research for making any financial decisions. Kev, we got a CPI print yesterday that was kind of a mixed bag, but the market seemed to enjoy what it saw and went absolutely crazy yesterday. We have a PPI print tomorrow that I think is also very important and is going to dictate. We've seen a little bit of a flattening out today. Do we give those gains back or do they keep going even higher? Some consumer data Friday that is also very interesting. So it's been a wild week. I'm ready to, for the volatility to continue summer's over, my kid's back in school. Let's get down to business, man. How are you doing today?
I'm doing absolutely great. There's tons of things happening under the surface, and doesn't matter if the sense on TV or what Trump's saying, or pretty much if the market keeps going up higher and higher, there are tons of problems. And that being said, and I told you before the show, because there are tons of problems under the surface, it only makes sense that we go higher. For how long? I'm still weighing that out. There's things that I'm looking at today, volatility in particular. We'll look at that chart that hints that maybe we bottomed in the VIX. But outside of that, there are dates that we are going to be looking at because that's when things are starting to break out, and a lot of them kind of align. But I'm doing great today. I'm very happy with, my dog days of summer, the apocalypse portfolio that I've built. Literally, if things go up or down, my shit's been staying very strong and sideways. So, there's nothing too concerning, especially with the low volume. So wherever you want to start today, I am game, but I got the charts ready.
All right, let's recap yesterday's data real quick. We had year over year headline inflation was at 2.7% compared to the expectation of 2.8 and flat from the previous month at 2.7. So we saw that come in better than expected. The market was excited there. The core numbers came in right at expectation. 0.3 month over month, 3.1% year over year. Previous month was 2.9%. You have to take into account seasonal adjustments with that. So that is why the street was expecting a little bit higher number for the previous month. Now the question becomes, what next? I mean, we saw a crazy move in the expectations for rate cuts throughout the rest of this year. 3 more meetings left, and now we're seeing about a 50% chance of 75 basis points lower than where we are right now. I'm seeing a 4% chance of a 50 basis point cut in September, all but guaranteed we get 25 basis points in September. Meanwhile, like I said, the expectation now, and there's a little bit of a, with what Besant said today, which we'll touch on in a second, I'm seeing 55% chance of 75 basis point cuts between now and the end of the year. I don't know if that is what the market, like if people who are really deep in the markets, I'm not sure if that's really what is going to be what's best for it. I mean, I understand we need the rates to go down. Like I want rates to go down, but at the same time, if you are invested in the markets and you're long in these spots, you don't want that, because that means that we've seen a lot of data come in to show that problems are much worse. Ideally, if the markets, to get back to a lower interest rate, it would be like 25, 50 points a quarter, not 75. So, in my opinion. So, I think that there is some concern potentially in like, okay, our rate cut's going to be a sell the news situation. Like, the people are buying the rumor of the rate cut now. When it actually occurs, is that when the sell takes place? We've seen that historically. I think we're set up for that if we do get 3 rate cuts this year, or if one of them turns into a 50 basis point cut. So that's kind of where my rationale is. Like I said, tomorrow we get the producer price index numbers, 8:30 a.m. Eastern. The CPI is the backwards looking, right? Like CPI is what happened in July. What we're getting tomorrow is what's going on now and what is going to impact the August CPI numbers that come out in September. So that's why I think that we're seeing a little bit of, you know, the markets flattening out a bit for the day. You know, Nasdaq is down 0.02%, S&P is up 0.2%, the Dow is up almost a full percent. So a lot of these big tech stocks are just, you know, things are taking a pause. Things are kind of like, all right, let's see where we go from here. I think tomorrow morning is when we're going to get that signal of what is to come. And then, like I said, Friday we have some retail sales data that's going to show the health of the consumer. I think we've already seen from, you know, earnings from places like Kava and Chipotle that the consumer is starting to cut back on those things. So definitely a concern if you are long some of those like retail dominant stocks right now. But you know, what are you seeing in the markets? And then we will kind of go into crypto and everything else from there.
Definitely. To piggyback off what you were talking about, you know how people are pricing in now all these rate cuts potentially in September. We need to look at short-term duration bonds, and that's because we're getting a lot of volatility now. That's not a good sign. What we're seeing is yields spiking to the upside. You know, yields getting higher. That means it's been a lot of bond sell-offs in the short-term duration ones. The problem with that is that's a liquidity issue. But now what we're seeing the spikes in the Asian market hours, particularly on Tuesdays, in Japan market open. And then what we're seeing now is in the US hours, people are buying the 3 month treasuries, 3 month durations. So we have to kind of wonder why and what does that mean? And I think we saw a bit of a dip today because of, again, what Ascent said, and yeah, pretty much the direction that we're probably anticipating going into September. So when you buy a 3 month duration bond, you have to think like, okay, why are they doing this, right? Uh, you can see these spikes here. This is on a Tuesday. This one over here was on a Tuesday. This one was on a Tuesday, 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 Tuesday. That's all Japan. Just so you know, that's Bank of Japan or banks in Japan selling off U.S. debt in order to, you know, make good on solvency issues, you know, margin calls, anything like that to keep the trade going. It's also why we're seeing the Nikkei continue to climb higher and higher. But we're getting the part that's more U.S. based today with this big, you know, bid that we're getting on the yields. Why this is important? Well, because if we start to look at this in the context of weeks, not days, we can see that for the most part, every time that we get a bit of a rollover in the treasuries for the 3 months, you get some pretty good moves in the market. Right here in February of 2020, started to roll over, and then obviously you had the pandemic. You know, back here in July, you had a bit of a summer sell-off. You're starting to see this here as well, and there's a couple of other instances too, right? Here's 2008 rolling over. Again, the reason why we're looking at this and why we're seeing it getting stronger during the US market hours as opposed to the Asian market hours is because you have to think what people are doing. They're parking money outside of the equities because they wanted to get a fair yield, have some safe cash for, say, 3 months, and maybe they pick up the pieces when there's a bit of a pullback in, say, November, December, when things are pretty cheap going into January of next year, and then they have a lot more cash on hand to buy some of these. Again, a 4.21 or whatever, 4.22% yield, not necessarily bad if you think you're going to get into, you know, high market volatility. If we look back at April, that was a 10% drop in the market. I'd rather have the 4.2% for 3 months and then, you know, pick up some really cheap stocks come end of the year, beginning of the year. That's one theory that we're looking at. But this kind of relates to what's going on in Japan as well. So I'm going to pull up the BOJ's 30-year. This is the weekly. I want to pull this up on the daily because this is going to be really interesting here. This is poised to go a lot higher. And the funny thing is you already broke out and you retested it. And you have essentially, what is this, tonight, Thursday? Yeah, this should be the last day that it kind of fits within this. If that's not the case and it doesn't get back into this and break down, you're probably going to see the 30-year go a lot higher. Now, we know that there are some issues in Japan. There hasn't been intervention on the bond market side. It kind of tells me that there are some banks that might be beyond the point of no return. We think that could be SoftBank, that could be Norchukin, it could also be banks like UBS, right? That are, pretty much in a point where they cannot sustain these yields going any higher. More so, SoftBank, I would think, is the one that's in a lot of pain. If these yields continue to go higher, their unrealized losses are just going to be maxed out. But with all this bad stuff happening under the hood of Japan, at the surface level, what we're looking at is all-time highs, just Gap City on the daily in the Nikkei. All-time highs. You broke through the 42 level. You're at 43,274. Honestly, you probably could go up a little bit more. The MACD is still green. I think the volume hasn't peaked yet. You got some more room on the stochastic RSI. But the question is, what is this all leading towards? Well, it's probably leading towards a quarterly OPEX. Friday is the OPEX here in the US. We have VIX expiration next Wednesday. I think after that VIX-X, you are in a period of, volatility, maybe possibly bottomed. And we're looking at higher volatility coming into this September quarterly OPEX. And the funny thing is, this ends here, September 4th, September 5th. And this is the VIX channel, the VIX pattern that we're looking at, the triangle. Every time it's trading within this triangle pattern, it breaks out where this could potentially hit. Maybe we see the VIX go to 59, 60 or so. And that would be kind of like a double top from where it was in April. Could go a little bit higher, maybe the double top for the yen carry trade. Or if things are absolutely worse, you could see the VIX probably go to somewhere closer to that, 2020 level, which would have been around 85. It doesn't have to by any means, but you have been coiling up for such a period of time. And you can see that the VIX is extremely, extremely undervalued in comparison to the S&P. And it's kind of on this trend line where it's found support each and every time. So we're going to watch how this kind of trades going into the VIX expiration. They might try and push down a little bit more, but for the most part, I think that we're at a very good value level for support. And this might be something that's extremely undervalued going into, once again, that September 5th date, which means that it would be September 8th when the markets open, where you could see some potential volatility in Japan. It leads into the Monday market open in September. Kind of a lot of stuff to talk about right there. But it's just kind of what we're not seeing at the surface level. We're seeing all-time highs. We're seeing, volatility in stocks. And the funny thing is about the S&P right now, low volume. I mean, it's absolutely insane. Like the moves that we're getting to the upside are almost dead. Let me pull this up real quick, and then we can jump into something else. But looking at this here, you can see that the volumes are dropping off as we could get further and further into the summer. Price is going up. We're up like 4.75% on the S&P from this local bottom where we had a pretty good volume candle on the 31st of July. And now volume and price are diverging in separate directions. I don't have the volume on the other two indexes, but that is usually a sign that, hey, this rally probably isn't as strong as we think it is.
All right, let's go into crypto. That is where a lot of the excitement has been. For us recently, we have Bitcoin trying its hardest to break above and stay over 122. It was just at 122 for a little bit, came back down. ETH continuing to move higher. Bitcoin closed at a new all-time high yesterday. It's approaching that again. I know there's a big potential short squeeze at 125,000. I think I saw like 15 billion or so worth of shorts that get liquidated at 125. So could be a big move there. ETH is trying to make a run for 4,800 and potentially even 5,000. We got Sol, we're at these key levels right now. Like this is just a very interesting time to have the charts up because we got Sol just under 200. It went there for a little bit, came back down. Can it reclaim that and close above 200 once again? Alts are having a good day. Fartcoin is having a good day. I'm happy to see, I made a buy a couple days ago. I bought some Arbitrum. That has had a very nice day today, up 14.5%. So, one of the L2s that I am bullish on for ETH is ARB. So yeah, it's exciting in crypto. And now it becomes like, can we continue this momentum higher? Where is the liquidity coming from? But it still seems to be out there, man, because it is hot.
Yeah, that's an interesting thing too, right? We're seeing the total market cap continue to grow, but we're seeing dominance drop. So that means that there is some money coming from somewhere, right? looking at this Bitcoin chart here, you are really kissing this level of support, right? This since the April bottom that we got from the tariff trades, or the first round of it, Liberation Day. You've been hugging that nonstop. 1, 2, 3. You're probably going to come down one more time, but you're getting really close to the end. I truly believe that you're getting very close to an end. I think that Bitcoin could put in a new all-time high. I genuinely think that 124 to 125 range isn't out of the question. It's just very possible with dominance dropping and money kind of flowing in. And I think a lot of this money is, yes, firms, hedge funds. I also think a lot of it is retail. If retail is being stupid here and just like, oh no, if this is the new, it's very possible. But like House said yesterday, it makes sense given how ETH and some of these other things have performed. It'd be stupid not to buy Bitcoin and Ethereum. That makes sense to me, why we continue to see the dominance drop while market caps continue to grow, right? And it's very similar to what we're seeing in the equity market, going to all-time highs, even though the volume is dropping and maybe it's not the most liquid state that we've seen throughout an entire bull market or a bull cycle. That being said, I think you're trading within this little triangle here, and either you're going to break out of it to the upside and put in a new high, or you're going to lose it. But I think you're getting trapped going into the end of August, start of September. At some point, it's just not going to work anymore. And again, maybe this top trend line is wrong. Maybe it's more something like that. And you're just going to kind of be range bound within this. So that's my thesis for Bitcoin. I think that Bitcoin dominance is going to continue to drop. It just makes sense here. We can see that there is a trend to the downside here for Bitcoin dominance. I'm looking at 57%. And that's a really good thing if you're bullish on alts, because that gives you some leeway in seeing some money flow into some of these lower market cap things. So I'm really bullish on 57% on Bitcoin dominance. If we look at ETH,
I do think now, we'll talk about ETH, and to that end, the news yesterday about Tom Lee trying to raise an additional 20 billion to buy ETH with BitMine is, definitely part of what led to some euphoria around ETH yesterday, and that big move that it has had over this. I mean, shit, man, if you had bought at down in April when it was 1462, you would have just a nice little 222% in a few months. Like that's a hell of a run. I think people got complacent, myself included, and forgot how violently ETH can rip when it really gets going.
Absolutely. And again, you have a lot of institutional money going into it, right? And they did in April, most definitely. They parked any cash that they had on hand in ETH, and now it's paying off. It's very hard to fight the idea that it's not going to break the all-time high. It's not far off at all, right? I think it's very possible that we do. And that would also be like all these achievements, these milestones that we've really tackled since Trump's been in office. And I'm not giving Trump any credit, but I'm saying that it's something that markets are going to be really euphoric over, right? We got the Bitcoin all-time high. Now we're going to get the ETH all-time high. If it can break, 48 or whatever it is, it's very close. It's very fucking close. And that's going to really get people riled up and excited. And, it's a lot more exit liquidity that's coming into the market. So that's a dangerous thing, but at the same time, it makes the most sense. Now, this does impact how low I think ETH does go in the next move. Maybe the 600 level isn't where it goes. Maybe it's 800, or it changes up just a little bit. This ABC wave that we've been talking about forever, went as low as like 800 or so. Maybe it's a double bottom there, or maybe it's some different type of move. But I just don't see it going lower than that if it breaks all-time highs by a substantial amount. If it's a little bit, maybe it's a flat correction. If it's what do you call it? If it goes to like 5,200 or something like that, then we have to completely scrap any ideas that we had on ETH and its price trajectory. Now, looking at Fartcoin, this thing, I sent you guys this last night. This is called the saggy ball sack pattern, and this would be ideal. This would be ideal if for all Fartcoin.
You make it look like it's going to go up, and then the coin's going to travel back in time. So I don't know if that is like that this second part of the sack makes it look like we're gonna time travel with our Fartcoin.
Have you ever seen a ball sack that's straight. I can't. Here's the
but
thing.
I'm just saying from a charting purpose.
I know.
If
I could just have it be a straight line, I would. But again, I'm using a parabolic trend curve line here. The reason why I literally cannot get it to straighten out here is because we're talking about like we would need fucking 300% green candles on the daily to fulfill that higher price
Wouldn't
target.
mind that.
I would not be opposed to it at all. I do think you're running out of time. That's the only problem I have, again, with the VIX bottoming out, in my opinion, today, seeing where some of the treasury bonds, again, that doesn't necessarily sound like it's important for crypto. I do think it is in the broader context of liquidity, but I think we are going to be heading towards some bad weeks ahead in, the beginning of September and on. The question is, can we get price discovery before then? I'm really hoping so. We had a really great day yesterday. I mean, how far did what was the bounce yesterday? I think it was
like 20%.
Yeah, it was 19.7 when we closed, and then today we're up 4.37%. I mean, credit to House for letting us know, and he knew what was what. I mean, I'll be honest with you, I was very frustrated with Fartcoin. Best chart in the world was not doing what I wanted to at all.
Bitcoin is on the move right now.
Let's see, where is it? 123?
122.4 is what I have on my end.
It's
ETH up to 47, almost 4750. Sol just went back over 200. So we are,
cooking.
Things are cooking right now.
Do need Sol to go up though. We need Sol to go to like that 225 to 240 range.
I said 225 the other day, and maybe I need to
I want it higher.
Me too, because that means Fartcoin is going higher.
Yeah, exactly. That's the only reason.
But I mean, then you look at some of the other alts, like we got Link back at almost $24. AVAX has gone on a really nice run. That has had some struggles in the past, but that's looking really good, back over 25. We got some of the other memes that are keeping up with Fartcoin. I mean, XRP is still, 327. Like, that's kind of lagging a bit right now. I think that got overcooked. So much excitement there that some attention had to move to other places. But yeah, go ahead and then say what you want to say, and then we'll start wrapping this up.
Yeah, I got nothing more on the crypto front. I do want to share some stuff that is related to GameStop that is very interesting that happened yesterday. And again, lines up with what's going on in Japan, and also a little picture that's fun that we found out.
I feel we need to have a few more videos. One, when you said Gap City, we definitely need Trap City, but Gap City. So we need a video for that. And then I also think we need one for when you go on your conspiracy theory discussions for what you're about to, I know what you're about to say right here. So maybe you just it drops a picture of Charlie from Always Sunny and you're just sitting there chain smoking or something. But that's all I wanted to say. Go ahead with GameStop.
Well, the funny thing is my conspiracies turn out to be right in time. FTX, CZ, Michael Saylor, we'll see. NVIDIA, I think we're very close. We're going to see some accounting errors there in the coming 12 months. Again, not financial advice. I got no proof to say so. So I'm just cautious on a lot of things that I talk about. What I'm not cautious about is the fact that UBS had someone drop $621 million worth of its stock all in one sell. Drop the price, obviously, fairly significantly in the short term. It's bounced a little bit, but this is a massive dump. 16 million shares through an overnight placing, and it went through. Makes sense, right? We know that UBS is holding all the Credit Suisse toxic, pretty much shorts from GameStop in 2020, 2021. And that being said, we're getting closer to the Japanese yen carry trade unwind, the bond market imploding, something happening in Japan that is absolutely terrible for liquidity in a global context, because again, the yen and the dollar, two of the best currencies that you can have and trade with. But this was something that someone pointed out last night on Twitter. I'm going to show the screen. You already seen it, but the signs are already there, guys. It's the fucking flag of Japan.
Also, there's a cat on the flag of Japan.
Yeah, and he's playing with the rising sun. That is absolutely wild. That, again, whoever, I didn't get the name, but whoever pointed this out, it's just like, oh my gosh. He's been dropping hints for so fucking long. And the funniest thing, you're not going to like this. This is like the ultimate 10. If we go to his Twitter, and we go to, obviously there's a dog right here on the 22nd of January, right? That's from Futurama. It's actually the tweet here that's really important. There's that dog again. And the date's even more important. 9/6/2024. 9/5 is the important date where everything breaks out of the volatility channels. I don't know if this guy is just a TA master or what, but that's fucking scary. Like a year prior that you can point out like everything converging at that one date. And that was essentially the last tweet that he had from that entire summer position that he was building last year. So I'm not trying to spook anyone into buying anything, not at all, but there's just a lot of things that are converging. And this is like the fun conspiracy thing that I honestly hope is true, because if it is, pump my fucking bags. If not, I still like the stock, and this has been entertainment enough. You don't need a Netflix account when you have this type of free entertainment. At least use your mind too when you're having this type of fun.
We're going to leave it on that note as the markets continue to run this lovely Wednesday. Appreciate those of you who joined us. We will be back on Friday. You're good for Friday, right?
Yeah,
I probably
Friday's
should have done this off there. We'll be back on Friday. Go through the PPI data, go through the consumer data, see how the markets are behaving. We're going to continue to run. Is a pullback coming? TBD on that. But once again, thanks for joining us, everybody. Like, subscribe, comment, share us out. Have a great day. Enjoy your week. Stay safe. If you start taking screenshots, take a little bit of profit, and we'll see you next time.
Take care, everyone.